What's up, guys? Welcome back to my channel. In this video, I want to talk about the bearish sentiment that's growing because of a strong 3% sell-off in the market indexes. People are calling for tops now. People are calling for a crash. Recession is coming. I've heard that story since the April lows. Where has the recession been the entire time up? They've disappeared, right? And now they're coming back again because of a less than stellar jobs report that led to Trump firing the commissioner of labor statistics after he said that he claimed that they were manipulating jobs numbers. And jobs was coming in at 73,000 and it was revised downward by 250,000 jobs. So the labor market is weakening, and he's calling on Powell to cut rates immediately. And on April 1st, tariffs kick in as well. So a lot of fear is going on in the stock market that led to an extreme 3% sell off in 2 days. However, I feel that that fear is extremely overblown because markets are looking for a reason to sell. As you can see, we had the first red weekly bar since about 6 weeks ago. We had 1, 2, 3, 4, 5 straight green weekly candles. And look how far we are above the 9 weekly moving average. We are above that weekly moving average. We haven't tagged that weekly moving average since, late June. And if you look at the past performances of the S&P 500, it's rare to see the weekly candles become extremely overextended, well off above the 9 weekly moving average without coming down to retest it at some point. As you can see, we got dojis here to let the moving average catch up to its price. And now that's exactly what happened. We're still holding above the 9. The MACD is still bullish. Momentum is still bullish. We're not even overbought yet on the weekly RSI. And yet a lot of people are calling for a crash. And 590 to 600 S&P 500 minimum before going back up. I'd have to disagree here, because if you look at the previous highs, which was made in January and February of 2025, you can see that we're only less than 6 points away from those highs. And it would not surprise me to see us gapping down on Monday and ripping right back up to new all-time highs before all is said and done. Because look how far apart we are with the MACD. The MACD is extremely bullish. We're not getting any of these crossovers, bearish crossovers that we've seen that led to a significant, multi-week sell-off. That's not what's going on here. It would not surprise me to see the market continue to grind higher because of how overextended we are. If you look at the daily time frame, you can see that we had, I'm looking at this as a 5-wave impulse move higher. So this is 1, we got 2, and if you notice wave 2 was a 6% sell-off on the S&P 500, and that lasted 1, 2, 3, 4 for 5 days. We only got a 2-day sell-off, and a lot of people are calling for crashes now. And look what happened after this. We ripped right back up. MACD was turning bullish, and we had a significant run since April. And I believe that we're just finishing off wave 4 here. Maybe it's done, or maybe we have a little bit more to go. But I believe that after we tag the 50, which happens to coincide with the previous highs, we're going to rip right back up. And this is going to trap a lot of people because I believe it is a liquidity grab for the market to move even higher. One other thing I want to point out here is that if you look at earnings, we have a bunch of tech companies that are reporting next week. Earnings season is not over. And mega cap tech that reported last week did extremely well. Microsoft performed well. Meta is one of the strongest AI names right now in the market. We had strong performances from Apple and Amazon. Amazon only fell because it had a weak forecast. But also, these companies performed really well. And so earnings continue to do well coming from these companies. And with Nvidia coming in the latter half of August, it's hard for me to imagine that a lot of people will become extremely bearish on the markets, even though they're waiting on this one single report to, push the market even higher. So that's what I'm looking at right now. Don't fall into the trap of, this is really bearish, buy puts, it's going to come down to 500, 590 to 600. I think if you fall into that trap, I don't know what to tell you, because we're still in the buy the dip regime. Until the weekly turns bearish, then yeah, maybe we're going much, much lower, but that's not what I'm seeing right now. And you can see the angle of ascent here on the MACD tells us that there's still firepower left in the bulls. I would like to see the RSI become extremely overextended, just like here in 2024, before we get like maybe a 3-week sell-off. And then up here again, maybe we get like a here to get a 3-week sell-off. So I would like to see the MACD become, or the RSI become extremely overextended. You can see that how overextended the MACD was on the weekly time frame before we get a significant multi-week sell-off. So I'm not seeing anything close to it right now. And a lot of people are top calling for a crash. We'll see how that plays out over the next couple of weeks. I'm not in that camp, but I'm telling you exactly what I see here. And I don't think it's unreasonable to say that prior highs which were resistance, is now going to act as support. It would not surprise me at all to see prior highs, which acted as resistances, now turn into support for the overall market to rocket higher. Hope this helps you guys, amidst of all the bearish news, bearish charts that are showing up on X, on all these social media platforms, and on YouTube. And hope this video helps you guys think about your investments in a more calm and collected manner, and hope this video helps you out with your investments. If you have any questions or comments, please leave them down in the comment section below, and I will see you guys in the next video. Peace.